Hello, Dave Knight from 123daytrade.com. Thanks for watching. Thanks for being here. Today was Tuesday, February 21st, 2017. I had to look at the calendar up here. Yesterday was President's Day. Hope you had a good holiday and a good day off. In our trading room today that I run Tuesday, Wednesday, and Thursday, I had two trades overall, plus 68 ticks. I went short at, let's see here, my first trade actually came in right at 8 a.m. Central Standard Time. I went short at 54.93. And the second contract, you can look at that on your own. But my exits were 54.69 and 54.40. I talked about 55.03 inside the room. What you waiting for? What are you waiting on, right? I was watching this one guy recently, and one of his quotes there towards the end of every video, he goes, "None of us are getting out of here alive. What are you waiting on?" So I had a conversation by email with a fellow trader, and and I don't know the particular what his situation is financially, but usually when someone throws up the red flag, like, "Hey, I don't want to give the credit card information to you," what I more times than not, and I hate to put and pigeonhole everybody into the same spot, because I am the same way. I am a square peg trying to fit into a round hole. It just doesn't work. But why do I have a credit card and not just let you come in for free? Because I don't want tire kickers. I don't want people that waste my time. I want people that are serious, bottom line. And if I have to negotiate that out, so be it. So it's my trading room, and I do it my way. So it's, as my dad would say, it was my way or the highway. But I believe that I got a valid trading way of approaching the markets. I don't know. I mean, look, this is my spreadsheet today, and I challenge you to go and look at the morning high of the crude oil market, if I'll ever frickin' focus in. Let's get it closer, maybe. Well, I'm trying to get it to focus, but it won't. Oh, well, that's why, because I got the... Anyway, that says 55.03. I don't make this stuff up. Gann talked about this a long time before me. But it's uncanny. It's just simply uncanny how things kind of work out sometimes. And I'm not a smart. Well, I'm smart in some ways, but in a lot of ways, I'm not. My common sense level is okay. But my trading skill is because more times than not, it's because I have more screen time in front of the computer than you do. Now, the guy that I referenced and I said something about, one of the things that I like to do, one of the careers I debated about for a long time was, and I still think about it occasionally, on occasion, because I think the freedom of the road would be really cool for a point in my life. And maybe at some point that's what I do. I want to get my kids out of school, but the truck driving lifestyle, and things are moving to automatics, and there's all kinds of neat things that are going on. And I could keep believing that they'll just keep getting better, or it'll go to the computerized type of movement with a driver sitting in that doesn't do anything. So most likely, we probably, maybe not in my lifetime, but within my child's lifetime, it'd be motorized movement on the roads with complete computerized, like, and then maybe we're flying in the air like the Jetsons. Um, if you look at Uber right now, I believe the company Uber, they've actually just modeled a taxi that can fly and get you from point A to point B. So the Jetsons lifestyle, I mean, you talk about a cartoon that they're flying around. I mean, we've actually got the ability right now to do it. And we have the ability to have these automated um, routes being driven with no one inside there. So where does things go? I don't know, but what I can see is technology is taking us one way, but the trading is still there. The crude oil market, for now, for better or worse, the futures market is still, in my humble opinion, the best place to be with a little bit of money. So, yes, I'm in FTP. Yes, it's a simulated account, but I'm going back into funded. I have no doubt in my mind that I won't make it back into funded. And what I want to make sure of, though, when I get back into funded, is I stay there. I was talking to a gentleman by another guy that I was talking to. Seems to be a rare, really, really knowledgeable person as far as trading goes and his insight. Um, and we're having a conversation back and forth on Twitter and on YouTube and Google Plus and all kinds of other places that he's made some comments. And I came back to the conclusion that I want to figure out how much. Yeah, I don't want to get pigeonholed, I guess, into the how I got to make this per week to succeed as a trader. I don't want to be pigeonholed into that kind of category because, in other words, like for instance, when you look at truck driving as a new driver entering the business after you get through all your training, they tell you that you can make anywhere between, say, 800 gross to 1,000 gross per week. Now, is that true? Is it not? I mean, I don't know. But that puts you working 50 weeks a year, that puts you at $40,000 to $50,000. So the question that I ask myself over and over again is how do I make my trading business at least a $50,000 per year business on just trading, one contract or two contracts? And it comes down to a concept that I like to call, well, it's actually called the 3 V's of trading as I look at it. You got your volatility, you have your velocity, and the most important component is volume. You need all three of those to be able to trade inside the futures market, especially to be able to trade in the crude oil market. So anyway, so for every 10 to 15 days, what I want, I should say trading days, not days, because trading days is much different than just calendar days. So 10 to 15 trading days, the days that you actually sit down and you're making a trade and you're actually placing a bet, for a lack of a better way of putting it, you're placing your bet which way the market's going to go. Now you take your calculated risk component into it, and you take your calculated guess. So it's obviously a guess. You're taking your best educated guess, let's say, at what you believe the market's going to do. Like today, when I was trading, and I saw the market moving up real close to R3 today, I believed that the market needed to come down to roughly Fibonacci number 61.8%, which put the market roughly at about the 54.35 area, or somewhere in that area, in that vicinity. Now, my target on the down was 54.31, and I ended up bracketing 54.31 to 54.41. You'll see that in the charts, and you see how I handled it. So as far as the trading day goes, and the reason that I'm able to be a little bit more successful probably than you at this point is that I've got a lot more screen time and I understand what range means to me, and you need to determine what range means to you. What's the average range that a market can move before it retraces? That is very important to, at least in my trading, to understand how far that I believe a market, if it moves a certain distance, let's call it X, the day that X amount that I was looking for the market to move was roughly 25 ticks. I needed the market to move 2p today because 1 was at 12. And if I was, and basically if I want to put on a trade, I want to have a 2-to-1 profit to loss ratio in any trade that I take on for the most part. And today, if I would have followed the spreadsheet and at 1/2 hour, it's at 5 ticks. I mean, that's too close. You can't trade the crude oil market and only risk 5 ticks. It's going to eat you alive, in my humble opinion. The market retraces too many times. So I always recommend when the low volatility, you get no more than you risk no less than 8 ticks and no greater than around 10 to 11. But when you risk that amount, real quick, if 1p target is 12 or 13 ticks like it was today, if I'm trying to get 13 ticks, let's say 12. If I'm trying to get 12 ticks, but I'm risking 10, that's not a good trade-off. So, and if you add a second contract in there, it's still not a good trade-off because you're taking on an extra amount of risk. So in this case, be 20 ticks against a possible gain of 24 ticks, just taking it 1p. So you've got to make the market move further out and you've got to find a good position. If you're going to add that second contract in a low volatility environment, you got to find a good place to put that. I used to think that, I want to come in all in at the first mark of whenever I see a good entry signal. I don't believe that anymore. I believe that you should stage yourself in, but I don't believe that you should dollar cost average your way in. And what do I mean by that? I mean that, like today, when I look at my entries, and I'll tell you the second entry because if you go back to look, you'll see it. My first entry comes in at 8 o'clock at 54.93, and my second entry comes in at 8:29 at 54. Let me make sure I said the right thing. 54.93 on the first entry at 8 Central Standard Time, and my second entry comes in at 54.84 at 8:29 a.m. CST. So go back to the blog post and you can fast forward to see the entries. Now the second video that I put up to, or part 2 of the video that I put today, you'll see me managing the trade and how I'm managing it, trying to reach what I believe. I really thought the market would reach down to either 61.8% retracement or run down to the 50% retracement on the Fibonacci. I wanted to give myself the ability to reach that level. And what I knew going in right at the trade level, and not just going to throw this out there because I talk about it if you listen to everything I say, the market went up at the time of trade. I'm not talking about what it did in the afternoon. I haven't looked. But in the morning session, it went up from roughly the open of 53.90 up to 55.03. It moved up 9p. What that tells me is a retracement trade can go, if you just half that, 4.5. Did the market go down 4.5 from the high? And it did. It definitely went down 4.5. It went really close to a 5p down move, which would have been 54.31. I believe it stopped on that particular time when I was in the trade. I believe it stopped at 54.33, and it went back up. And actually, when I was closing down the trading platform today, I think I recall seeing 54.65. So it had made a move all the way back up to real close to where the market was breaking. Now, did it go up above the $55 mark later in the session? I don't know. I mean, it was looking pretty strong coming up. We were in, and I talk about it in the video. I said, hey, we're in a tiebreaker scenario right now. What I had was 2 volume bars to take into account. There was a volume bar early, 24.65 at 8 a.m., and then at 9:30 a.m. it was like 24.96. There it is. It was 24.96 later in the session, the difference being 31. That would put you in kind of a tiebreaker, what I call the tiebreaker scenario. If I was going to trade it, highest volume bar was red. Hindsight's 2020. It would have been a beautiful move, at least worth 30-something ticks, maybe a 3p move on the way up. I didn't catch that. I was quite pleased to be up 68 ticks at the end of day 1 at FTP. All right, it's 15 minutes and I'm done. Um, so I talked about a little bit of everything today, but bottom line is um, the difference. Let me leave you with this. The difference most likely between you and I as it relates to trading is that I have a hell of a lot more screen time in. And what I see things differently than you are and than that you do at this point. I mean, I'm a contrarian by nature now by trading. I enjoy trading the short side of the market. I think, I talk about it all the time. Um, but I also like trading long when the opportunity is there. And that's about really all I want to talk about today. I appreciate you guys listening and the 8% gals that are listening. And that's about all. Yeah, I just want to say, come on in. The water's good. And that's about it. God bless. Take care. I'll see you on the next video I put together. Bye for now.